for the trees with your finances?
Time for a bit of help then. It's Money Saving Monday.
Now, we want to keep our tax bills as low as possible so the government doesn't take more than it should.
Well, Dominic Laurie has been leafing through one investment that claims it could cut our bills for inheritance tax or capital gains tax. But not everyone has twigged onto it yet.
This forest in Surrey is the front line against the taxman. These trees will one day make fence posts, newspapers, MDF and DIY furniture. But all being well, they'll also give investors a payout in a few years' time that the revenue will find it hard to get their hands on. Here's how it works. A pool of investors buy a forest like this, wait several years, and then either sell up or reinvest for another chunk of time. The idea is, as the forest grows, so does the value of the asset.
They grow over about a 35-year period here, compared to about twice as long in Scandinavia.
This investment manager has just opened up a new fund. The minimum stake is £15,000. He says he's already had a lot of interest, and he explains why.
It's a low-risk, asset-backed investment. It's obviously a very green investment. As we chop down the trees, we have to replace them. The long-term average returns are very good at 5.6% per annum. The trees physically grow year on year, and they add to the return. And it also comes with a raft of tax breaks for private investors.
The government wants our forests to grow, hence those tax breaks Stephen was talking about. First, inheritance tax. If you were to die after 2 years from the date of making your investment, your estate would get 100% relief on inheritance tax. Good news also on capital gains tax. If the forests, that's the asset, increase in value, which of course you hope they do, capital gains tax doesn't apply at all. There's also news on income tax. Most trees will be chopped down when they're mature, and the fund will probably close before then. But if any trees are felled during the period of your investment, you won't be liable for income tax either. These aren't zero-risk investments. Their value can go down as well as up, just like the market for timber can. So, just like the forest, there are some unknowns, but the idea is you enter into the fund, and hopefully you come out the other side 10 years later having made some pretty decent investment returns, but also you've made use of one of the most tax-efficient vehicles around. Not everyone can find £15,000, but if you have the money and you're worried both about inheritance tax and deforestation, this could be something for you.
Talk about a big surprise when you go down to the woods. Christine Ross is here from SG Hambros. Of course, it only reduces your tax bill if you make a profit with these investments. Does that look too good to be true?
Well, it isn't too good to be true, but it's a very, very long-term investment that you can't easily get out of. It does increase, it does reduce your tax bill, even if you don't make a profit. Because for inheritance tax purposes, it gets something called business property relief. This is the sort of relief that's also given to family-owned businesses, unquoted companies, so that businesses on the death of the principal shareholder are not split up, or BPR as it's often known. And that's usually the reason people invest in things like forests and other these sorts of investments. So if you put 100 into forestry, one way or other, and you live for 2 years, after 2 years, that 100 value will not form part of your estate for inheritance tax purposes, so you've got the 40 saving if you have an IHT bill.
Any other ways of doing the same thing, sheltering from inheritance tax?
Again, you've got to look at risk. AIM stocks listed on the alternative investment market. Again, 2 years ownership, they're exempt. There are lots of packaged investments around. Do be careful. They're what we call unregulated collective investment schemes, but there's lots of different things around based on anything from leasing dust carts and MRI scanners to NHS local corporation. They work to things that make television programmes, even for the BBC. There are different, effectively capital-protected investments that qualify for this very unique relief.
She always manages to say something that completely surprises us, doesn't she? Chancellor's a hungry beast, of course. How do we know he's not going to just take away these allowances?
You don't, but business property relief has a very, very wide application. As I said, it affects all unquoted businesses owned by families, and therefore, although it can be fine-tuned if the Chancellor feels it's being taken advantage of, in the main, I wouldn't expect it to be taken away.
Christine, always good to have you on. Thank you for that bit of advice. Andy, lovely to see you as well. Thank you for coming in.